Are you tired of spending your end-of-month close manually copying payroll numbers into your general ledger, praying that one tiny typo doesn't ruin your entire financial reconciliation? Managing payroll without a seamless connection to your accounting software is one of the biggest operational friction points growing businesses face. Every pay cycle creates a mountain of financial data: gross wages, employer payroll taxes, benefit deductions, 401k contributions, contractor payouts, and employee reimbursements. When you try to move that data manually via spreadsheet exports and manual journal entries, you introduce three massive risks to your organization. First, human error. A single misplaced decimal point or swapped account number can take hours or even days to track down during month-end closing. Second, massive inefficiency. Finance teams waste dozens of hours every month acting as human copy-paste machines instead of focusing on strategic financial analysis and growth forecasting. Third, delayed financial visibility. When your accounting books aren't updated immediately following payroll runs, leadership makes business decisions based on outdated cash flow numbers. Fortunately, modern HR and payroll platforms like Rippling are designed to eliminate this friction entirely through deep, automated integrations with major accounting systems like QuickBooks Online, Xero, NetSuite, and Sage Intacct. When configured correctly, an automated integration ensures that every single dollar spent on workforce costs flows directly into your general ledger as an accurate, balanced journal entry the moment a payroll run completes. The primary concern most finance leaders and business owners have is that setting up this integration will be overly complex or disrupt their existing general ledger architecture. You might worry about mapping the wrong account, messing up your chart of accounts, or causing duplicate entries that scramble your financial reports. Setting up the connection is actually a straightforward, step-by-step process when you prepare properly before clicking connect. The foundation of a successful integration starts inside your accounting software, long before you open the integration settings. Before initiating any connection, you must audit and clean up your chart of accounts. If your general ledger is disorganized, your synced payroll data will end up in the wrong places. You need distinct, clearly defined expense and liability accounts ready to receive payroll components. At a minimum, ensure you have dedicated accounts for regular wages, overtime, employer payroll taxes, healthcare benefits, retirement match contributions, and expense reimbursements. If your business uses structural tag features in your accounting software, such as classes or departments in QuickBooks Online, tracking categories in Xero, or departments and class segments in NetSuite, make sure those structures mirror your organizational layout in Rippling. Once your general ledger structure is clean and aligned, you begin the actual integration process inside Rippling. Step 1 is app authorization. Log in as an administrator to your Rippling dashboard, navigate to the App Shop, search for your accounting software, and click Install. The system will prompt you to authenticate your credentials with your accounting provider, establishing a secure API connection between both platforms. Step 2 is account mapping, which is the most critical configuration phase of the setup. Rippling will present every pay type, tax type, deduction, and payout category used in your payroll system. You must line up each individual Rippling category with its exact counterpart in your accounting software's chart of accounts. For example, regular salaries get mapped to your salaries expense account, employer Medicare and Social Security map to your payroll tax expense account, health insurance premiums map to employee benefits liabilities or expenses, and direct expense reimbursements map to a clearing account. Taking your time to map each item intentionally prevents misclassifications from compounding cycle after cycle. Step 3 involves structural mapping for granular reporting. If you want your financial statements to reflect payroll costs broken down by department, division, or job role, you map your Rippling departments or teams directly to the corresponding classes or tracking categories in your general ledger. This guarantees that sales wages hit the sales budget line, engineering costs hit engineering, and administrative salaries route to overhead automatically. Step 4 requires choosing your journal entry summary preferences. Rippling typically gives you the choice between creating a lump sum journal entry or an itemized breakdown. A lump sum entry creates one clean total per account line for the entire payroll, which keeps your general ledger compact and easy to read. An itemized entry breaks down payroll costs per employee or detailed pay category, offering deeper visibility for internal auditing at the expense of creating longer journal entries. Step 5 is validation and testing. Never complete an integration setup without running a test sync or verifying the initial automated entry against your payroll summary register. Check that the total debits and credits balance to zero, verify that every tax and benefit component is sitting in the correct account, and ensure department tags match expected allocation percentages. By completing this systematic setup, your organization transforms payroll from a multi-hour manual chore into an instant, background process. You eliminate manual data entry risks, protect your accounting books from costly human errors, speed up your monthly financial closing cycle, and gain immediate, real-time access to accurate operational cost analytics. Proper preparation of your chart of accounts and precise mapping upfront guarantees complete financial control and peace of mind for every payroll run moving forward.